In this video, we're going to take a look at doing the post-closing trial balance once we have already done the closing entries. And if we have a completed worksheet like we have here for ABC Company. So when we did the closing entries, we closed out our revenues to income summary, we closed out our expenses to income summary, and we closed out income summary, which was the net income, to capital, and we closed out drawing into capital. Okay, and so now we're going to take a look at doing a post-closing trial balance. When we do any kind of trial balance, we list all the accounts that have a balance. Now, once we post those closing entries, sales will no longer have a balance. It'll be zero. All these expenses will all be zero. They won't have a balance, and the drawing will be zero. The capital account, since we put some stuff in there, will not be 30. It'll still be there. It'll still have a balance, but it won't be 30. Credit balance. All the rest of these accounts, cash, accounts receivable, supplies, equipment, accumulated depreciation, accounts payable, and wages payable, all of these assets, contra assets, liabilities, we hadn't touched those. We didn't make any closing entries on those. They're all exactly the same as they were, of course. You know, you had to have previously posted these, made these adjusting entries in the journal and posted them. So once we have posted them, then our adjusted trial balance shows all our account balances after adjustments. And this is what our adjusted trial balance looks like. And notice that, you know, none of these are different. Okay, all our assets and liabilities are still the same as they already were on the adjusted trial balance. So that makes it a little easier. Okay, so I'm going to go into where we did our closing entries, and I'm going to go ahead and use this same electronic journal paper. Okay, this is ABC Company. Okay, I'm putting in my heading. This is a post, means after, closing, trial, balance. And this is for the date of April 30th, and whichever year that you were working with. Okay. Now I'm going to put my labels, the account name. This is our debit column and our credit column. Okay, so now I'm going to list all the accounts that still have a balance. So we have cash. Let's see. Accounts receivable, supplies, let me check here, cash, accounts receivable, supplies, equipment, accumulated depreciation equipment, and we had an accounts payable, and we had a wages payable, we had ABC capital. Okay. Okay, so to continue on, we know that all our revenues and expenses will be zero. We know drawing will be zero. We know the capital number will be there, but it won't be 30. All the rest of these assets and liabilities will be the same. Okay, So we had started out on listing all the accounts that will still have a number. On a trial balance, if it has a 0 balance, they don't need to be on the trial balance. So capital should be the last account that you have listed. If you give me a post-closing trial balance and it has revenues and expenses with numbers on them, then you will get almost no points, because the whole point of a post-closing trial balance, post means after closing, that means your revenues and your expenses and your drawing account are all supposed to be closed out to 0. Okay, so now let's go ahead and put these numbers in. And so I've got cash is 20 debit, accounts receivable is 30 debit, okay, we have supplies is 2 debit and equipment is 100 debit. Okay, accumulated depreciation is 40 credit. Accounts payable is 50 credit. Wages payable is 9 credit. Okay, so we have 40 credit, 50 credit, and 9 credit for wages payable. Okay, so all of these are the same because we haven't closed these out. So they're the same as what was on our balance sheet. Now it's just the capital number that is different, and it is not 30 like it is on the worksheet. We have to figure out what it is. So once again, we can draw a T account. Of course, you can look in the general ledger, and that will tell you, because once you post all those closing entries, okay, so there's my capital T account. Now I had a 30 credit balance in there from the worksheet. Here's my 30 credit for capital from the worksheet. Okay, so that's what I'm starting out with. Now, if I look at these closing entries, I have a credit to capital of 33. I can post that into my T account. And down here on the fourth one, I have a debit to capital of 10. Okay, now I can foot and balance this. So I got 63 credit, 10 debit. So my balance is 53 credit. Okay, so let's see. Okay, so 53 credit is what is the new balance that should be in your capital account. That should match your statement of owner's equity that we did back in the financial statement section, and it should also equal the general ledger. Once you got the adjusting and closing entries posted, you should be able to look and see a running total balance of 53 credit. Okay, so once I get these, now I can look at and get the totals, because the whole point of a trial balance is to make sure that my total debits equal my total credits. So when I add up my debits, I got 152. I add up my credits, 50 plus 53 is also 152. Now, if yours don't balance, when you total these up, my first suggestion is that you probably didn't put the correct capital number in there. You probably put the 30 from the worksheet instead of the new ending capital number. That's the most common mistake there is. Other than if you have some revenue or expense account that you still have sitting in there and they're all supposed to be zero now. Okay, so my totals, total debits equal my total credits. I feel confident. I've matched my 53 to my statement of owner's equity, and the 53 should also be the balance that's on the balance sheet for capital as well. And so I am now finished. The post-closing trial balance is the very last thing for this month. And now I can move on to the next month and start fresh on the next month. All of my assets and liability accounts in this new capital account will go forward into the next month, but then I will start adding new sales and expense amounts.